Does the Producer Price Index, PPI, impact consumer inflation indicators? In today's economic climate, many are asking a pressing question. Does the Producer Price Index impact consumer inflation indicators? As inflation remains a hot topic, understanding the connection between these two indices is essential for consumers and businesses alike. The Producer Price Index is a measure that tracks the average change in prices producers receive for their goods and services. This index is often viewed as a leading indicator of inflation. When producers experience rising costs, they may increase their prices, which can eventually affect consumers. For instance, if raw material costs or labor costs rise, producers might pass those expenses to consumers. This can lead to higher prices for everyday goods and services, impacting inflation as measured by the Consumer Price Index. The Consumer Price Index measures the average change in prices for goods and services purchased by households. Recent data indicates that both the Consumer Price Index and Producer Price Index have shown signs of cooling or remaining steady. This suggests that the immediate impact of producer costs on consumer inflation may be limited at this time. However, concerns about future inflation persist, particularly if producer costs continue to rise. It is important to note that the relationship between the Producer Price Index and consumer inflation is not always clear-cut. Other factors, such as demand fluctuations, supply chain disruptions, and monetary policy decisions, can influence how producer costs translate into consumer prices. For example, if demand remains high while supply chains face challenges, producers may still raise prices despite a steady Producer Price Index. Conversely, if demand decreases, producers may absorb costs rather than pass them on to consumers. As we move forward, keeping an eye on the Producer Price Index can provide hints about potential inflationary pressures in the economy. It remains a key indicator for anyone looking to understand the broader economic picture. In summary, while the Producer Price Index does have an impact on consumer inflation indicators, the extent of that impact can vary based on multiple factors. Staying informed about these trends can help consumers make better financial decisions in uncertain times.